Hello, investors. While global markets tremble under the weight of political friction, economic uncertainty, and semiconductor sector struggles, some smart money is quietly eyeing one of Europe's biggest chip makers, STMicroelectronics, STM. The stock might look battered after a rough 2-year stretch, but beneath the noise lies a potentially undervalued opportunity with long-term upside. So, is this just a value trap, or the perfect dip to buy into? Let's break it down. A rough ride but a rebound in sight? So far in 2025, STM stock has dropped over 25%, and that comes on the heels of a brutal 46% plunge in 2024. Yes, that's a lot of red ink. But the big question isn't just how much has it fallen. It's why. And more importantly, is the worst behind us? STM's recent bounce, a sharp 9% rebound in one April trading session, may hint that bargain hunters are starting to take notice. After all, the company is no startup. STM is a global semiconductor powerhouse with over 50,000 employees, deep ties to automotive, industrial, and IoT markets, and long-term goals focused on innovation and sustainability. Governance turbulence, a temporary distraction? One of the biggest clouds hanging over STM right now isn't technical or even financial, it's political. The company is jointly owned by the French and Italian governments through ST Holding, and a power struggle between the two nations is spilling into public view. Italy recently accused STM leadership of insider trading claims the company flatly denies. Meanwhile, a heated battle over board appointments and management influence is escalating, with Italian officials demanding more say in the company's direction. While this sounds messy, and it is, seasoned investors know that governance issues are often short-term distractions, especially for companies with strong fundamentals. STM has always operated under a delicate balance between French and Italian interests, and historically, it's managed this complexity quite well. But with pressure mounting from Italy's side, the noise could persist, and that's what's creating potential discounted entry points for investors. Business fundamentals, still solid? Despite the drama, STM is not sitting still. The company recently reaffirmed major expansion plans in Italy, doubling production capacity in its Agrate, Lombardy site by 2027, and committing to operations in Catania, Sicily. Yes, they plan to cut about 2,800 jobs globally over the next 3 years, but this is part of a larger efficiency effort and long-term cost optimization strategy. STM also launched a share repurchase program, recently buying back over 3.5 million euros worth of shares at attractive prices. That's typically a bullish signal, showing the company believes its shares are undervalued. These shares will be used for employee programs or possibly held in treasury for future strategic moves. A rare European semiconductor player. STMicroelectronics isn't just another chip maker, it's one of Europe's few global-scale semiconductor companies, with deep exposure to automotive, industrial, and smart energy markets. Yes, this automotive exposure has been a double-edged sword lately, with slowing EV growth and supply chain hiccups hitting the sector hard. But here's the twist: those markets aren't dead, they're evolving. STM's chips power smart mobility, AI applications, and energy-efficient technologies, all of which are poised for explosive growth as global industries modernize. So, is it time to buy? If you're a short-term trader hoping for immediate fireworks, STM may still be in choppy waters. But if you're a long-term investor who understands that value often comes wrapped in volatility, STM could be a sleeper hit waiting to be awakened. The governance noise will pass. Political storms always do. But what remains is a fundamentally strong, globally integrated, innovation-driven company trading well below its recent highs and backing that up with strategic investments and share buybacks. In a market where US tech stocks are reaching sky-high valuations, STM stands out as a rare value play in the semiconductor space, especially for those who want exposure to Europe's industrial rebound and EV future. Final take: STM may not look sexy right now, but this dip could be a disguised opportunity. While others panic about politics, smart investors might want to keep STM on their radar, before the next wave of momentum kicks in.